You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of indeterminate length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Monday, 21st day of October, 2019. Thanks so much for tuning in, whoever you are, wherever you are, and we're just glad to have you right here, right now. Now, if you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, just point your browser, any browser, to youtube.com/CFRN/live. There you will find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Okay, I'm going to give you the numbers from around the world real quick, then Michael's going to pop in and give you the recap of everything that happened this morning in the live training room. And then I'll be back and we'll discuss all the things we normally discuss. We'll look at the Concierge Trade Alerts. We'll look at Logic 247. We'll talk to John, and a big treat today, Diamond and Silk Day. That's right, the lovely ladies from the Fox Network will be joining us right here on CFRN. My wife and I met them back in May, I believe it was, at a Fox Nation meetup out in Scottsdale. Had a conversation with them, invited them to the show, and, well, today's the day. So I look very much looking forward to that. Okay, here are the numbers from around the world. We're starting here in the U.S. These are cash markets. The Dow currently up 24 points. NASDAQ up 64. S&P 500 up 15. The Russell 2000 up 18. In the commodity basket, crude oil down 77 cents, trading 53.01 last. That's a drop of about 1.5%. Gold down $5.20, trading 14.8890 last. In the Asian markets, at the close, the Nikkei posted a gain of 56 points. Shanghai posted a gain of 1.5, and the Hang Seng added 6 points. No movers, no shakers. In the European markets at the close, the FTSE posted a gain of 13 points. The DAX posted a gain of 114. That's the biggest mover and shaker we have on the board today, other than the drop in crude. That puts the DAX up almost 1% on the session, and the CAC added 12. Now, although they aren't big numbers, they give us a green day in Asia, green day in the UK, and so far it is a big green Radio Monday here in the US of A. Let's go to Michael, get a recap of everything that happened in the live training room this morning, and when he's done, I'll be back.
Excellent. All right, thanks, Rain. Yeah, let me bring everything over here and show you my screen. And we'll go over everything we did today.
Alrighty, it's all yours.
Okay, I got it. All right. Good afternoon, everyone. Today is Monday, the 21st day of October, 2019. Let me bring this up. If you have not taken a free trial with us and you want to take a free trial with us, go to the home page at CFRN.net. Right over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. You can click on that, or you can click on any one of these other things down here that say free 5-day trial or user indicators for free. Any of those, they're all going to bring you to this page. On this page, all we ask for is your name, your email, and your phone number. You can also tell us your biggest trading challenge, so we can tailor one-on-one training specifically for you. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So you've got to make sure that you do that. Okay? Okay. Results. Everybody wants to see results. Today, as I said, is the 21st day of October, 2019. And if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we made 8 ticks in crude and 12 ticks in gold. That put us up $200 on the morning session. That is one contract for 2 hours. Okay. Today it took 8 minutes and 2 trades to get to the goal for the day. At that point, we were up $100 a contract, and we took a total of 8 trades. So on the month now, we're 15 business days into the month. We're up $2,052. That's $136 per day. On the year, we're at $30,483. That's over 190 days, averaging $160 per day. Again, that is one contract, 2 hours per day. One single contract, 2 little hours per day. All right. So here we go. We'll get into what we did and didn't do. All right. On the euro, I'm sorry, on gold. We started out right here on gold, and we picked up 5 ticks there, and then another 5 ticks right there. And that's where we got our goal for the day. 5 there, then 5 there. is where we got our goal for the day. We grabbed another 2 ticks right here. Then we had a break even, and we missed that trade, which would have been a winning trade. We missed that trade, which would have been a winning trade. And, well, the market kept plunging, putting in lower lows, but it didn't give us any more trade setups after this one right here. Okay, it changed directions and started to move up. It did give a long trade right here, and that was it for the break. All right, on the euro, now what do we do on the euro? We had just one trade, one break-even trade right here on the euro. Then there was a shorting opportunity here that we missed. Now, I'm not going to say this was another shorting opportunity, but it did close below the trend line. But the low of the day was right there. That's why we didn't do anything with that. It changed directions coming off the low of the day. We have dynamic resistance printing right here, and dynamic support was down here. So what to expect from this is a pullback down toward the BBC, and probably an up close to get up to this dynamic resistance. Okay, that is the euro. Crude, which is my favorite market. I say that all the time, but it's true. Picked up 10 ticks here, and we gave back 8 right here. We stopped out and gave back 8, and that put us at +2 at the time. Then we picked up another 5 right here to get us to +7, and one more right there to get us to +8, and we had a break even right here. That was the end of the morning session. Now during the break, there was a shorting opportunity right here that gave, it looks like, let's see, 53.17 down to 53.04. Yeah, you could have picked up 10 ticks out of that pretty easy. There's nothing else here though, right at the moment. The ES did not give up anything all day. It was just a mess. Look at this. It was just a mess and totally stuck to that weekly trading zone. So we didn't get anything on the ES. Didn't have a trade set up. Didn't try to take a trade. Nothing. That's the beauty of it all is, you know, if the markets are really choppy like they are right now on the ES, you just won't get a trade set up. You know, at most you'll get one that fails, and then it's going to be chopped, and the indicators will keep you out of the market after that. Okay, so that was this morning. Now let's go back here. Okay, today is the 21st day of October 2019. It's Monday. We made 8 ticks in crude and 12 ticks in gold to put us at +200 on the morning session. Today it took 8 minutes and 2 trades to get to my goal for the day. At that point, we're up $100 a contract, and we took a total of 8 trade opportunities this morning. So on the month now, we're up $2,052. That's over 15 days, averaging $136 per day. On the year, we're at $30,483. That's over 190 days, averaging $160 per day. Again, this is one contract, 2 hours per day, and you should be doing way better than that, because, you know, I have so many things going on in the morning that I miss trades like I just showed you. Now, to take a free trial with us, go to the home page at CFRN.net. Right over here in the right-hand column, it says apply.cfrn.net. You can click on that or any of the other things that say free trial on the page, and you'll be brought to this page, eminitrainingschool.com. Now, you can go directly to this page, eminitrainingschool.com. Put in your name, your email, and your phone number, and you can tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So you got to hit that. All right. All right. And that's it. that was my morning session. With that, we can pass it back out to fabulous Phoenix, Arizona, Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, I am.
Okay. Great. Sorry I had to do this. I hope to be back for Diamond and Silver.
Okay, great. All right. Let me bring up a chart. Recap of the recap.
Today, it took 8 minutes and 2 trades to get to $100 per contract.
8 minutes.
8 minutes and 2 trades.
There you go. All right. Thank you very much.
All right.
All right, guys. We are looking at an S&P 500 Emini Futures daily chart today. Now, I'm running the continuous contract here because it gives you access to more data. Current price $29.89 and a quarter. Let's go to the current contract. December. There's a couple points difference. You can trade with this symbol, the continuous symbol. If you trade with Daniel's Trading, if you use the DT Pro platform, the continuous contract is the @ symbol, like this. @ES. Okay, we're going to leave it on the December contract for now. Okay, so what do we have going on here? We have a high level battle going on between buyers and sellers. Now, if you listen to mainstream media, of course, the word is we're headed to all-time historic highs, question mark. That's what it says. And it's good that they do that because we don't know otherwise, do we? No, we don't. So why is this such a big deal? Well, right here, you're looking at the all-time historic high in the S&P 500 E-mini futures. Looks like just your ordinary, everyday, garden variety, green candle with a little wick on top. But in fact, it is the all-time historic high. We attempted a new high here and failed. We attempted a new high here and failed. We are now back in day 1, 2, 3, 4, 5. Day 5 of making a run at the all-time historic high. Now let's do this. Let's go to that all-time historic high. Let's drag a line across, see if we can make it straight. That looks, that's only off a point. Come on now. There we go. 30, 32 and a quarter. All right. That's about as close as we're going to get it. That is the magnet that draws and repels, the old reverse polarity thing. Now, in order to get to that all-time historic high, the market has an obstacle in its path. And that obstacle would be this failed attempt right here and here to put in a new all-time historic high. So the market has to deal with that issue first. If it can overcome that issue, then it can make a run at the all-time historic high. Now, what you see here, this is typical historical behavior of the S&P 500 E-mini futures, which tends to lead the markets. Now, I don't want you to take that wrong. When I say leads the markets, it doesn't mean that it actually moves first. Everyone's always looking for that particular market. Well, if I just knew which one moved first, well then when it moved, I could jump on the other one and trade it, and I would have no worries. In a perfect world, one of the markets would always be the first one to move, but sadly you and I, we don't inhabit a perfect world. So if you've been spending time and energy trying to track and determine which one always moves first, now let me save you some time and trouble. There is no such animal. Back to the drawing board. Okay. All right. So we even have yet another obstacle to overcome before we can get to the obstacle that we have to overcome before we get to the real obstacle, which is the all-time historic high. And that would be the high we put in on Thursday. Okay. Swing high was 85.25. So far today we've done 83.75. Okay. So we overcome Thursday's high, which will take us into the high put in on September 19th and 13th, which takes us to the all-time put in on July 26th. What happens if we get there? All right, we're going to use a little Fibonacci math. Almost every trading platform comes with the two tools I'm about to use. Now, you can buy ultra sophisticated fib software. You can pay about 20 grand, or you can use the tools that come with your trading platform. Okay. We're going to first look at this last leg up. I'm going to grab this Fibonacci price extension tool. You're probably familiar with the retracement tool, and we'll get to that in a moment. So we're going to go on this last leg up. We go from the low to the high to the retracement low, and we have already duplicated this leg and then some. So that tool won't help us. What shall we do? We'll go to this entire move. Remember, this was the all-time historic high. This was the low created off that all-time historic high. And what happened after the all-time historic high, that's typically what happens. Am I saying that we're about to have a huge sell-off? Well, I'm not going to forecast that. I'm just going to point out that it's typically what happens. So we're going to go from the low to the high. We're going to drag this down to the swing low of the retracement. And Fibonacci tells us we should look at 3,100. The big deal on the table right now is the round number 3,000. Big round numbers like that have a way of putting obstacles in the path of the market. They act as magnets, drawing price up to them, and then once price gets there, they become an actual obstacle to price moving higher. We've already hit the 62% Fibonacci price extension, which sent us back down to the 50, and now we're making a run at the 62 again. So we're dealing with two things. We're dealing with the high from Thursday, and we're dealing with the 62% Fibonacci price extension. Okay? All right, so if we can get through this obstacle, these obstacles, and these obstacles, pure math, this has nothing to do with midnight trips to Afghanistan, nothing to do with presidential tweets, nothing to do with the Chinese buying soybeans. It has everything to do with math, okay? Makes you kind of wish you'd have paid attention in high school when they were teaching it. Well, I'm sure most of you folks are college educated, so you probably did pay attention because you got the diploma, right? Okay. Now, if in fact that happens, if price can reach this 3,100 another round number, not as big a round number as 3,000, but big enough. Then what happens? All right. We'll take a peek at the future, because this is a big if. If price can break through the all-time historic high, if it can buck tradition, if it can buck what historically happens, and that's a sell-off after a new all-time historic high. Don't forget that the what we call the real estate crash, that nasty mess in 2007, 2008, that came right on the heels of an all-time historic high in the S&P 500 Emini Futures. So what I want you to see from here, from the swing low put in back on August 6th, to this number above, and remember there's a big if here. This is the if scenario. We're going to talk about the reality in just a second. If we can make it there, where would the market potentially find support on a pullback? The 24% fib right here lines up beautifully with this swing high. Here's the 38% retracement. Here's the 50. Here's the 62. We don't know if that is going to happen, so we have to deal right now with what we have in front of us, what we can actually calculate, and that would be from that low to that swing high right there. Okay, from the August 6th low to the recent swing high on September 19th. 24% Fibonacci. That's as if we get stopped in our tracks. If we can't get through this obstacle, if we can't get through the next obstacle, if we can't take out the all-time historic high, then a retracement would bring us back into this area, which lines up with these lows here. That's certainly doable. A 38 brings us here, a 50% retracement here, and a 62 here. Again, we don't know where this market will top out. It will eventually top out. Trees don't grow to the sky, they grow towards the sky. But they never quite reach it, do they? Okay, so does this look bullish? It certainly does. Do we have all sorts of geopolitical tension and many other things going on in the world today that could affect this market? Absolutely. Could a tweet come out of the blue in the next 5 minutes? It could. Whatever you do, don't ever trade without a hard physical stop loss. There are different kinds of stop orders. When you see us on the show, in the live training room, we use buy on a stop orders and sell on a stop orders. So don't get that confused with a stop loss. The stop loss is designed to stop the bleeding, okay? Buying on a stop, selling on a stop allows you to enter the market with the momentum of the market. Most likely, if you got your training in the world of equities, trading stocks, you were taught to enter on a limit order, get in on a pullback. Nothing wrong with getting in on a pullback, but once it pulls back, you do well to wait for it to start moving again in the direction of whether you're going long or going short. Make sure that you have the wind at your back. It's no fun and a lonely business swimming upstream, okay? So, if anything can happen at any time, and you don't know what that anything could be, it could be positive, it could be negative, it could be good news, and the market reacts negatively. Could be bad news, and the market welcomes it. Sometimes when your greatest fear manifests and becomes reality, in other words, you're fearing bad news, the bad news comes, and you cry for a moment, but then you shake it off and go, well, okay, man, I've been worried about that for days, weeks, months. Now that it's happened, I'm still here, still ticking. Shake it off, keep on moving. This is why you won't see us trading the news. There are some people that trade the news and trade it quite well. It's what they do for a living. Well, we don't. We do our very best to stay away from news when we know there's news coming. We won't put on positions. If you're already in a position and news comes and maybe you didn't plan it properly, or you're in a multi-day swing trade, you just need to know that news is coming. So when your chart comes to life and becomes very volatile for a few minutes to a half an hour, you're not rattled out of your position because you understand why the market suddenly jumped. Typical times for news are 8:30 a.m. Eastern, 9:30, not so much. That's the opening bell on Wall Street. 10 a.m. Eastern, that's a big one, okay? But watch those two times, 8:30 a.m., 10 a.m. Eastern. Now, if you trade the Globex session, you should be aware of news events, economic reports that come out in other parts of the world, such as China. If they have an economic report, a major economic report, and they have a huge hit or a miss, that can affect what you're trading here. Can it affect crude? Yes. Gold? Yes. S&P? Yes. Pretty much anything you see on this screen today, it has the ability to affect it. Okay? All right. So you're going to always trade with a hard stop and always understand the premise of the trade. Here at CFRN, our traders always know what the goal of the trade is. They have an interim target, a trade to target, and they also understand how to stay with a trade even beyond the final target, waiting for the chart itself to hand over an exit signal. Okay? On an extended move, our indicator set will show you. It doesn't print exit on the screen, but once you know what to look for, then you understand that the chart is saying this move may not be over, but it is running out of steam. And when a move is running out of steam, it's best to look for the exit, okay? Unless you have some larger plan in place, which has a even further target out there somewhere, either above or below, depending upon if you're going long or going short. And that's one of the great things about futures, is that you can be very nimble. If you trade intraday, you can be long, you can be short, you can be long again, all in the same session. Okay, just depends upon your trading plan, the methodology that you've learned, and how you choose to approach the markets. So that's a big picture look of where we are, where we could go, and I'm not going to insult you by prophesying what will happen next, because I don't know. Now, many people will attempt to convince you they do know what's going to happen next. But I want you to think about this. In Genesis, we read the story of the creation of man. And when God created that first man, Adam, he made a conscious decision not to give Adam the ability to change the past or to know the future. And those two are inextricably linked for eternity. Man comes along, modern day. Well, even back in the day, there were soothsayers, fortune tellers. Now, we have record of it in the good book, but were they ever looked upon favorably? Even the ones who came with the word of God, the prophets in the Old Testament, what happened to them? Yeah. So, modern day, fast forward, we've got computers now, algorithms, quants, frequent flyers, frequent traders, high frequency traders. It doesn't change the underlying fundamental principle of the world in which we live. or the ingredients that God put into man. Now, we can't know the future, but we can know what the next high probability move is. That's what I want to draw your attention to. If someone on their website or in a flashy email tells you that they've cracked the code, uncovered the secret, have the combination to the vault, be leery. Now, let me say this. They may not realize they don't have the ability to know the future. They may actually think they do. I don't want to be too harsh on them, whoever they are. But now you know the truth. The truth about trading. And that's what we offer you at CFRN in our mentoring program, everything that we do, the radio show here. This is the truth about markets. It may not always be what you want to hear, but it will always be the truth to the best of our knowledge. Okay? And until someone can prove different about this business of knowing the future, we're going to stand firm on our position that man does not have the ability. No man, no machine, no indicator, no oscillator, no algorithm, not nothing, not no way, not no how. Okay? That's just the truth. Truth about markets. Now again, knowing what the next high probability thing is versus knowing the truth, that's the difference between night and day. So why not take what you can rely on, take what you can depend on, because that actually gives you a higher probability than guessing about something that you can't know. Does that make sense? Okay. Let's go to a smaller time frame chart of the S&P 500 Emini Futures. 30-minute chart. The weekly trading zones that you see on the chart are from last week. Now, why would I come on the radio with last week's zones? Well, I'm about to tell you. Zones from last week. Every Monday morning at 6:15 a.m. Eastern, all of the CFRN partners and passport holders receive the weekly trading zones in their email and also in the private Telegram channel. The numbers that you're seeing on the chart today, these are the numbers that were given to our partners and passport holders last Monday morning at 6:15 a.m. Eastern. And that's private property until Thursdays. Every Thursday, I break out the zones for the entire CFRN community, the entire audience, whoever's tuned in at the time. And as you can see here, last week's zones on a Sunday night, on a Monday, even a Tuesday, some weeks even up through Wednesday, can give you some valuable insight as to not only what the market is doing, but what it's trying to do. Okay? This zone right here, the Globex open last night was right there, that green candle. We had a gap lower open. We love a gap open on a Sunday night. You don't see too many gaps in futures because they trade around the clock. They do take a day off on Saturday. So when the markets open Sunday night at 6 p.m. Eastern, some Sunday nights we have a big gap. If there's some kind of news that has come out over the weekend, and sometimes we just have a small gap. The market closed Friday at 29.85, and we opened at 84.75. Okay, not much of a gap, but what happened when we open is we ran into resistance by 8 p.m. Eastern last night, 2 hours after the open. We hit the zone from last week. When we approach a weekly trading zone, that's what these are called, WTZ, weekly trading zone. When we approach a zone from below, we expect it to be good resistance until it isn't. When we approach a zone from above, we expect it to be good support until it isn't. So here we go, we hit the zone. This is wide-ranging consolidation. Did we actually get above it? We did. That changed an important dynamic, because remember, when we're approaching from below, you think resistance, just like we saw back on Friday. Market rallies up, hits resistance, turns it back down. Okay. When you approach from above, let's go back to look at Thursday. Support. Think support when you approach it from above. Support. Support. The most likely thing to happen when price encounters a weekly trading zone is consolidation. Consolidation is what you see right here, and here, and here, even here, and yes, back here. That's the most likely thing to happen. The second most likely thing is rejection, and the least likely, but it happens, we call it the slice. As we encounter those other two, as we look at the markets today, I'll show you what the rejection looks like, and I'll show you what the slice looks like. But for now, just remember the most important thing, consolidation. Consolidation can look different on different time frames. Here, you only see just 2 candles, actually 3, touching the zone. But if you break it down to a smaller time frame, say a 5-minute chart, most of you are familiar with using a 5-minute chart if you trade futures and even equities, you see a lot of candles building a base here right in this area that we call the zone. All right, so when we approach from above, support, whoop, whoop, until it isn't. This is what it looks like when it isn't. Now we're approaching from below, we expect resistance. We approach it again. Now notice we put in a higher low here. So the bearish pressure that sent this down, after we made this leg and this retracement, buyers came in right here. Let me add a little something to the chart. When we rallied up, not only did we hit that weekly trading zone, we also hit this green line, and we call it the BBC. That's just the name we gave it. It stands for Bull Bear Cross. And right here is a perfect example. When price is below the BBC, we're bearish. We anticipate lower prices. But in that anticipation of lower prices, we also look at our chart and go, okay, yeah, we anticipate lower prices, but that zone right there is potential support. And it was, which sent price back up to the BBC again, except this time buyers held their ground, fought their way through, and even managed to take it above the BBC. Sellers come in right off of this swing high right here, like clockwork, hammer it back down. See, now with this candle, you get back below the BBC, consolidating for 1 hour, 2 hours, 2.5 plus hours, right here. Now, traders all over the world are clicking that mouse left and right. I'm going long, I'm going short, and it's a trap, okay? especially when this turns red and starts falling. That's a good indication that possibly buyers are not going to win this particular battle. And they did not. Sellers took us down to this low right here. Buyers came in at that point, ran it back up, but we're hitting that BBC from below and the WTZ from below. That sends price back down. This line right here, the red and blue line, we had to give it a name, so we call it the CFMA1. All right, as in, actually it was called the CFRN MA1 until we realized that, do we really want to have to say that 50 times a day? And the answer is no. So we changed it to just CFMA1. All right. If you've been around trading any length of time, you realize that the blue represents the same as green, typically bullish, red bearish. So price gets rejected. Well, this isn't rejection, so let me not use that term. Price runs into resistance at the BBC and the WTZ, which sends price lower. That's what we expect, how it works. But because this is blue and climbing, that represents support. Whoa. So now price is pinched up between resistance, support, resistance, support, resistance, support. And once it ekes its way through here, it's still got to deal with the WTZ, which it does. And then when price starts to walk sideways like this, it's very important. You got to move, and remember these are 30-minute candles. You've got a move going. Price starts to walk sideways. That particular move or that particular leg may be running out of steam. And when that happens, price is going to go look for support, which it finds more often than it doesn't at the BBC and the WTZ. So see, where we had two things acting as resistance here, we now have those same two things acting as support here because we pulled back to it from above. Now this is red and falling. Shouldn't that represent resistance? I mean, if this whole thing is going to be logical, shouldn't it? Absolutely correct. That's what this wick is all about. I mean, buyers grabbed a hold of it and they ran it. They ran it nice, up about 5 points. But sellers weren't quite done. So we consolidate here. For goodness, 1, 2, 3, 4. Got about 5 hours of consolidation. Now, all of our traders know this is not an opportune time to be clicking the mouse, getting long or getting short, because the market is still trying to make up its mind. Okay. Now, the movement of the market, what you're seeing right now, this green candle, okay, the movement of that candle has absolutely nothing to do with any indicator or oscillator. If someone has convinced you that their indicator or their oscillator dictates market behavior, well, that's a stretch, all right? Quite a stretch. Our indicators do what they were created to do, no matter what time frame or market we deploy them on, because what we do is fluid across all markets and all time frames. When we deploy our indicators, the job they were created to do was to go into that market and that time frame and find the underlying rhythm of that market and that time frame, and then show it to us, which it does beautifully. And then when it's time to put on a trade, help us find the best entry. The best entry is always high probability and low risk. If you're about to click the mouse and you don't see high probability and low risk, you're better off waiting for the next opportunity. Patience and discipline are probably the most important tools that you have in your trader toolbox. And unfortunately, many trader toolboxes out there don't have either of them. They've got impatience and undiscipline in spades. You got to replace those tools with patience and discipline. So, buyers, right here, when you see this red change to blue, buyers are now winning the battle. Now, I don't talk about the market itself in war terms. I don't fight the market. I like to think of the market as my business partner. Who wants to have to get up and go to work with their enemy every day? But I know you've heard people say it, and you may even say it yourself, so I want to suggest that you rethink, what you're thinking about, because thoughts lead to words, words lead to actions. And our thoughts, words, and actions today are the building blocks of the tomorrow we inherit. Now, if you're on a mountaintop right now, you probably go, yeah, I'm the architect of my own existence. That's cool. But if you're in a valley right now, you probably don't want to hear those words. Remember what I said earlier? You may not always like what I say, but I'll always tell you the truth as I understand it. Okay? All right. So back over here. This turns blue. Buyers are winning the battle. So, yes, inside of my friend, my business partner, the market, buyers and sellers, they are having a battle. They are duking it out. Who will be dominant? Okay? So this turns blue. We know that buyers are winning the battle. So are we going to jump in right there? Or right there? Maybe there. How about there? How many times have you gone long? Right there. I used to say that I could turn any market on a dime. All I had to do was go long or go short. Now, you're probably smiling going, I resemble that remark. Yeah, we all do. Now, I won't get into the psychology of sight and markets and price and order flow at the moment. But if you have an interest, I'll certainly share my thoughts on it with you. Just book a free mentoring session. You can do that at our website. You can call and talk with Valerie, 949-42-EMINI, or send her an email, support@cfrn.net. She'll make that happen for you. Okay. So yes, we've all been very good at going along right here, and then the market turns, goes the other way. Okay. So our traders are taught not to go long here. We want to see price move away from the BBC, the green line, bull bear cross. We want to see price pull away. That shows that buyers are here in force. Now, price always reverts to the mean. Rarely, except during an economic event, will you see price travel in a straight line. And if you're on a 30-minute candle or an hourly candle, that might last for 30 minutes or an hour, sometimes a few hours. But price just, that's not how it moves. It channels back and forth, back and forth, back and forth. From the smallest time frame to the largest time frame, price channels back and forth. So we channel up, price always reverts to the mean, and in our case, the mean is the BBC. So when it channels up, we want to see it channel back. Support. We anticipate support here. When this green candle starts printing, that's what we're looking for. In our training room, where we use a range chart, if this were that range chart, you'd be taught to go long on the next candle, of course being wary of the previous swing high. If you're trading in the larger time frames, along with me, if you're utilizing the Concierge Trade Alerts or the Logic 247, you might very well feel comfortable going along as this green candle is building, okay? Because we have everything in place that we possibly need. Price has pulled away from the BBC. Price has pulled back to physically touch. Now, some might teach you on a pullback. I talked about this earlier. Maybe you've been taught to buy on a limit. And I don't want to tell you that's wrong, because there's nothing wrong about buying on a limit. We just choose to enter the market differently, okay? So we got the move, we got the retracement. Now, this retracement could have come here, or up here. We're just going to wait for it until it happens. And then as we start printing green, that shows that the buyers came in on cue, on the mark, on the money, and now they're working to push this market higher. So taking an entry here around 29.98, we've ran up to 3,004. So that's a potential 6-point gain right there in the S&P 500 Emini Futures, which pay $50 per point. So that move would have been good for about $300 per contract traded. The cost to trade one S&P 500 Emini Futures contract is $500 of what's called margin. If you're not familiar with margin, check out our blog. Oh, I got news about our blog. We were inducted today to, let me find it. I got it right here. Stand by. This email came today from Anuj Agarwal, and if I mispronounce that, I do apologize. I hope you're tuned in. He is the owner of the top 20 futures trading blogs on the web. I'm going to give you the exact address. I'm going to put it in the chat box for you. So you can go there and check out his work. The email I got from him reads, "I'd like to personally congratulate you as your blog, Emini Trading, has been selected by our panelists as one of the top 20 futures trading blogs on the web." Thank you, Anuj. I personally give you a high five and want to thank you for your contribution to this world. This is the most comprehensive list of top 20 futures trading blogs on the internet, and I'm honored to have you as a part of this. We'd be grateful if you can help us spread the word. So that's what I'm doing right now. I'm going to right click, and I'm going to, as soon as I have something in the chat box, I'm going to click and post that. Oh no, I'll post it in the other. Stand by, because you can click this one. There you go. So in the chat box, not the question box, but the chat box, you've got a link that you can click. So Anuj, thank you very much. We appreciate that. Now, I talked the other day on the blog about, what is margin? In fact, why don't I? Is that one I already published? Hang on, I'll tell you. Might be one that's in the works. Let me bring it up. We've been doing this show and blogging since 2005. Yes, this article, Emini, finding the best market to trade. Okay. Futures margin, I'm going to explain to you what margin is in case that's a confusing term to anyone. Futures margin is the amount of money that you must deposit and keep on hand with your broker when you open a futures position. It is not a down payment, and you do not own the underlying commodity. See, when you buy stocks on a margin, using margin, and typically you have to put down 50% unless you have some other arrangement with your broker. You actually own the underlying commodity. If you buy shares in Microsoft or IBM or whatever the case might be, you own it, and the money that you've put up is your down payment. With futures, that's not the case. Futures margin generally represents a smaller percentage of the notional value of the contract, typically 3 to 12% per futures contract, as opposed to up to 50% of the face value of securities purchased on margin. So to trade one S&P 500 E-mini contract, you would have to put up $500. You have to have that in your account. Most brokerage firms have a minimum account balance, and in the case of Daniel's Trading, who we use, and we're using their platform right here, that's what the DT stands for. And if you need a futures broker, call 866-928-3310. Speak with Bert, 866-928-3310. And of course, when you take our free trial, that includes a demo platform, courtesy of Daniel's Trading. This is the DT Pro platform, live real-time data. You can put on, take off trades all week long. Use our indicators, the very ones you see me using up here today. You're able to use those so that by the end of the week, the end of your free trial, you have a good idea whether or not what we do is right for you. Now on this S&P E-mini contract, if you open and close a position during the day session, there are what they call day trading margins, $500. If you hold the position open from one session to the next, in other words, you open a position today, Monday, and when the markets close this afternoon, you're still in the position. It's okay, but when the markets reopen tonight at 6 p.m. Eastern, that begins the Tuesday session. Even though it's Monday night, that begins the Tuesday session. And you'll be charged the full margin, or the maintenance margin it's called. And for the S&P, that's $6,300. Big difference. So make sure you always know how much money you got in your account. And when it comes time for the closing bell, make sure you evaluate your positions. Because if you leave a position open and you don't have enough money in your account to cover that margin of $6,300, most likely they will liquidate your position. That's just SOP, standard operating procedure. Okay? All right. So now we know what margin is. We know what it costs. The one contract, that 6-point move that we just looked at, from the pull away to the pull back to this green candle up to here, about 6 points, $50 a point, $300 per contract traded. Worth mentioning is the value of this S&P 500 E-mini contract that you're trading. Very simple to find out. Right here, this number, 3002. Hang on, let me get my assistant. Alexa, 3,000 times 50, please.
3,000 times 50 is 150,000.
Thank you.
Of course.
And good morning.
Enjoy your morning.
Thank you. Okay. When you buy, when you trade one S&P 500 E-mini contract, for $500, you're trading an instrument that has a value of $150,000 based on the current market price. Now that works the same for all of the indexes. The Dow pays $5 a point. So you take the value of the Dow, multiply it, the current value of the Dow, multiply it times $5, and boom, there you go. So treat them with respect, because you're managing a lot of money. You've always said, I want to manage a lot of money. Well, put on one S&P 500 E-mini contract and you are, okay? So where do we expect price to go from here? Well, we covered price rarely travels in a straight line, right? Price is headed for this zone overhead. But remember, that's last week's zone. Partners and passport holders this morning got the fresh zones, and I just, in all fairness, I got to tell you, there's a zone overhead much closer than 3018. I'll go so far as to say about halfway. All right. So do we expect price to just race up there and tag it because that's the trade to target? No. Now there's a little part of our brain that always wants to see that. Okay? We watch price channel all day long until we enter a position, and we somehow in our mind expect that to be the beginning of the next trend, and it usually isn't, right? And so we fret and we frown and we furrow our brow, etc. Don't put yourself through that. Price will most likely pull back again to the BBC before it reaches the zone overhead. Why? Because that's how price moves. It goes leg, retrace, leg, retrace, leg, retrace, leg, retrace. Whether we're moving higher or lower, leg, retrace, leg, retrace, leg, retrace. That's how it does it. Okay. Let me show you what we did with this last night. Hang on. Now, coming up here in about 20 minutes, is that right? 20, 25 minutes. I think Diamond and Silk will be joining us. And let me check on Mr. John. Pretty sure he's standing by. Just jingle his phone. All right. I'm going to show you the Concierge Trade Alerts from last night, and you're free to grab a screenshot if you would like to. So get your tool ready, whatever it is you use to grab screenshots with. Okay. Okay. Here we go. They came out last night, about 15 minutes after the Globex open. That's when we go to work. That's when Logic 247 goes to work. That's when the Concierge goes to work, 6 p.m. Eastern. Every Sunday night, we put the pedal to the metal and we don't let up till Friday afternoon at 5 p.m. Eastern. Okay? You got them. Oh, you can't get the soybeans down there. There you go. Okay. Now, this is what our traders are taught to do as soon as the Concierge Trade Alerts come in. There were two numbers, 29.97. So they're going to put a line in the sand at 29.97, which is right there. Okay, that's still not straight, is it? Yeah, it is. Okay, that's one line. The other line, 29.82. So last night, before price did much of anything, because we got them out during the first 30-minute candle. So our traders are sitting there with these two lines on their chart, waiting for price to trigger either one. Right here, we reached up through a red and falling CFMA1 and tagged the trigger at 29.97. But since we just discussed that red and falling is bearish, as opposed to blue and climbing, which is bullish, When price reaches up through red and falling to touch a trigger, yeah, you might just want to wait. Now, important prices, important areas are almost always tested. Typically, these concierge trade alerts will trigger more than once during a trading session. How often more than once? I'd say better than 50% of the time. So if this isn't conducive to going long, you're going to exercise those two new tools we put in your toolbox today, patience and discipline. This is the trigger to consider being long. This is the trigger to consider being short. Everything in between is the market trying to make up its mind what it's going to do. And whatever it does will be dictated by order flow. I started to explain this earlier, so let me catch up to that. Indicators don't move price. Oscillators don't move price. People move price. And since there is computerized trading, let's just call them buyers and sellers. The buyer or seller could be you, Joe Smith, could be Deutsche Bank, could be an algorithm in either one of those places. Buyers and sellers. When order flow, and this is what order flow looks like, when there are more buyers than sellers, price moves higher. When there are more sellers than buyers, price moves lower. It's that simple. Looking at these numbers here, at the moment, there's slightly more buying than selling, but these numbers change so quickly. I don't have a good methodology for you to trade off of order flow, but I want you to be simply aware that order flow is dictated, that price is dictated by order flow. Order flow is comprised of these two parties, buyers and sellers. More buyers sends it higher, more sellers sends it lower. It's that simple, okay? Now, on this one here, okay, it was on that very candle that we went from red to blue. See that? Here's the trigger, the one I like, okay? On this trigger, price ran up from $29.97 to $3,002. It's a 5-point move at $50 per point, $250 per contract traded. Now, I think I mentioned important prices, important areas are almost always tested. So we trigger at 97. We make a run to 3002. Most futures traders will consider that right there a good day's work. A 5-point move any day. What does price do? It gets back below the trigger. Buyers come in and they run it back up, not just to 3002, but this time to 3004. That's a 7-point move, $350 per contract traded. All right, we're going to talk to John. He just popped in, and we're going to talk to Diamond and Silk. When we finish all of the festivities today, I'll pick up where I left off right here with the Concierge Trade Alerts and the Logic 247. Let me just give you a quick glimpse of what's coming your way. When we take a look at Logic, stand by. We are on week 64. Last week, I think, was the most brutal week we've had in over a year. 31% of alerts were stopped out. 31%. We average 20%. We're in week 64. We had a long trade on the S&P, long trade on the Dow, long trade on the Russell, long trade on, or short trade on crude. This one hasn't triggered. There's gold. There's the S&P again. There's the Dow. I had a duplicate in there. There's a short on gold. Short on the British pound. We'll talk more about the British pound today. There's a long on the NQ. All right. So just to give you an idea. So I don't know what kind of a percentage that gives us for this week so far. Hopefully better than last week. I think Valerie computed it for me somewhere. Yeah, so far this week we've had 12 alerts total. 10 are actionable, 2 are still waiting. So we don't have any stop outs yet this week. Remember, the pendulum swings both ways. All right, let me open up John's mic. John, thanks for being patient. Oh, John, you have an open mic. Very good. Okay, he's got an open mic, so I'll keep going until he pops on. We've covered the S&P. Any questions? Any questions about anything that I've showed you so far on the S&P 500, the Concierge Trade Alerts? Opportunity here to pick up 5 points, back below the trigger. Opportunity to pick up 7 points. That happened without us knowing what's going to happen next. You'll never hear us say that we know what's going to happen next. What you will hear us say is what the next high probability thing is. And when price got above this zone, and when price got above this BBC, as we call it, what that told us is that the market's, number one, on the move. Number two, it has an objective. And that objective is the weekly trading zone overhead. Keep in mind, partners, passport holders, and everyone participating in our free trial this week, they have the actual number. If you want the actual number, where the next zone is overhead, go to eminitrainingschool.com. eminitrainingschool.com. No credit card required. Don't need your mother's maiden name. Just your name, email address, phone number. You'll be good to go. You'll get to spend the next 4 days with us in the live training room. That's 9:30 a.m. to 11:30 a.m. Eastern. 9:30 a.m. to 11:30 a.m. the rest of this week. You'll have access to a one-on-one mentoring session if you'd like to take advantage of that. And you'll be able to use this platform that you see and our indicators all week long. The goal is, at the end of the week, if you're still looking for a way to trade Emini Futures, you found Emini Futures, you recognize there's great opportunity there, but you haven't yet nailed down a methodology or a strategy, or maybe you've tried a few things and they were either so complicated or so expensive you just had to walk away. What we have is simple by design. What I just showed you, what I just walked you through on the S&P, by the end of this week, if you show up every day and if you pay attention, you could walk me through what the next high probability move is in the markets. That's yours for free, and the journey begins at eminitrainingschool.com. All right, I got to get John in here. I need to take a 5-minute break before Diamond and Silk show up. John, you ready? All right. So we'll go to the YM while he shuffles in. Remember, these are last week's zones, okay? But they're still telling the story. Last night, right there, we opened right into a zone, closed above it. That's important. Because what happened? We pulled back. That qualifies as a slice. In one 30-minute candle, price moved all the way through the zone and closed on the other side. See that? Remember I told you only three things happen at a weekly trading zone. Consolidation, lots of that. That's the most likely.
Sorry about that, Dwayne.
Hey, John. Welcome to the show. Hey, taking a run with it. I need to grab a quick 3-minute break before the ladies come on. Okay?
Okay. Well, the markets, they're acting pretty well. The semiconductors in particular are acting particularly well today. Up nearly 9 points on the SOXL. And the tech also is up pretty strongly after a bit of a drubbing last week. The Dow is down and not performing well today, but that's not necessarily a problem. What's more important is as we pointed out last week, the mid cap and the Russell have been performing very well and kind of leading the market higher, while the Dow is subdued, mainly because of Boeing. I think for some reason Boeing got totally knocked down, and it's actually looking pretty grim for Boeing for the time being, after gapping down today, probably dragging the Dow down, maybe with a couple of other components as well. But the tech sector definitely looks quite brisk today, and also the LABU, which I've mentioned a few times, looked like it was bottoming out in the high 20s. It's really taken off today. Intercept, matter of fact, I was looking at Intercept when it was down in the low 60s, thinking it was about a time that it might turn, and it has turned, and it's up pretty strongly today. So the fact that the pharmaceutical stocks are kind of leading the way today is really impressive. And actually we've gone from 57 at the low, just made a nominal new low against the August low on Intercept, and we're up to 67. So we're up 10 points, $10 in Intercept in the last week or so, which is really impressive. So, excuse me, transport's also very strong today, and the banking sector. So, all in all, it's quite a constructive day so far. The dollar rallied a little bit after this Brexit thing. It's up about 40 cents after a very big down week last week. The pound actually has been hovering around the 130 area. It's obviously run into a bit of resistance here at the 130. I think it depends on whether they get a rapid exit this week, or if they do get the votes. It's a little hard to see which way the pound may go because of that. In a way, as I've been saying, if this thing is going to go through to January, maybe the end of January now, sort of a 3-month delay, I think the pound could rally substantially higher from here. Obviously, the euro, the Swiss, etc., are off a little bit today, based on this vote on Saturday. So, and the metals also, it's kind of weird because we started out with silver very strong. This morning got up about 26 cents. Then it kind of did a reversal and dragged the gold and silver down. Everything came back down. So that's a little bit of an issue. As you know, I've been saying we might be in for a little bit more of a test on the downside. And after today, that kind of looks like the ticket. But at the moment, the silver is still positive. And I wouldn't want to get too bearish on the silver unless we go negative. But it actually looks like it's starting to do that right now. The grains also pulling back Apparently, China's buying grains from Brazil, so much for the big deal on the grains, although that could change. But they're definitely, off quite a bit today, the grains, including the wheat, which had a rocket ride in the last few days. Everything's pulling back in the grain sector. And I think you have to be a little bit careful of this market as far as political developments. This impeachment thing is really a bit of a, right now doesn't seem to be bothering the market, but that could easily change if something comes out of the left field. It doesn't look like there's, this at the moment, it doesn't look like they've really got a strong case for pulling this off, but since they're controlling the House, they potentially can pull it off. They can pull it off even if it's a ruse, even if it's kind of like unjustifiable. So,
hey, Jonathan.
Hey, Bert, how are you?
Good. I think our guests are in the background. Diamond and Silk.
Good.
Hello.
Hey, ladies,
We're here.
welcome to the show.
Oh, thank you.
Thank you for having us.
Oh, we're so glad to have you with us. Here we have the conservative darlings. Tell us a little bit about yourselves, and there may be somebody in our audience that doesn't yet know who you are. We certainly do. Give us a little background information. We're so glad to have you with us.
Oh, my goodness. Well, first of all, thank you for having us. This is Diamond. We're Diamond and Silk, and you can say we're two black chicks that's down with politics.
I like that.
Listen, we just didn't know all of this was going to happen to us. Back in 2015, I was watching on television where I saw Donald Trump was announcing that he was running for president. I liked some of the things he was saying. I called my sister. I said, girl, cut on your TV. Donald Trump is announcing he's running for president.
Mm-hmm.
And she did, and she called me back halfway through. She said, this is going to be the next president of the United States. We didn't think anything of it, but we noticed how the mainstream media started throwing him under the bus, calling him out of his name, demeaning him and vilifying him. We didn't like it, so we spoke out about it.
That's
we
right.
just didn't know all of these people were going to hear it.
Mm-hmm.
Amen. And we're so glad you did. You've captivated America's attention, the world's attention. You're always so positive, so upbeat. But in the face of everyone and everything they throw at you, you stand your ground. I'm so proud of you for that.
Oh, absolutely.
Wow.
If you don't listen, if you don't stand for something, you'll fall for anything.
That's right.
You have to stand up for what you believe.
That's right. And if you don't know who you are, anybody can name you. So we don't allow anybody to just name us because we know exactly who we are and whose we are. See, we was created for such a time as this, just like President Donald J. Trump. He was created for such a time as this. So even in our mother's womb, we was being built and created for such a time as this.
Mm-hmm.
Ooh, that'll preach. That will preach. It's a true story. It is. And sadly, so many people don't understand that and don't realize that.
Yeah.
No, people don't understand that. That's why they try to put you in a box, keep you in a box, and they will take and they will demean you and smear you. And that's because they fear. They fear what you're saying. They fear people are going to gravitate to it, and they don't like it.
That's right. And you have a lot of people that being hateful, have such a hateful spirit, especially from the Democrat side. With them being so hateful, they're looking at it as reality. We look at this as something spiritual. It's something else that's going on here in this country that a lot of people are awakening to. But for the ones that's pushing against it, they don't see what's going on. And that's why they are really triggered and enraged about success, about prosperity, about a president that's looking out for American people and not illegal aliens. They don't know how to take this president. They don't know how to take Diamond and Silk. They don't know how to take the American people because they don't understand that this is something spiritual.
What do you think happened to the Democratic Party? Now, they used to be the ones who preached tolerance, weren't they?
No, well, if they preach
how did they become so
tolerance,
intolerant?
they've been lying to us for years. Because why can't they tolerate Republicans? Why can't they tolerate conservatives?
Right.
Why can't they tolerate anyone that has a different point of view? Why can't they tolerate people of color that has a different point of view? So they are not the tolerant. They're the intolerant. They don't know how to tolerate anything. Why can't they tolerate this president being the president, a duly elected president of the United States?
That's right.
You know, I don't know what's happening to the Democrat Party. You know, you have radicals that have entered in. They've gone so far left that they're falling off a cliff and they're taking people with them. And nobody want to be a part of a party that don't care about the American people, that advocate for illegal aliens, that don't care about our country, that advocate for other things, but don't advocate for the United States of America.
That's right.
Don't nobody want to be a part of that type of party. That's why you see a lot of people, hear about a lot of people switching their party to Republican so that they can vote for Donald J. Trump.
You know, and that was a great list you gave us, but we can't leave out the babies.
Oh, absolutely. You're absolutely right. They also advocate for killing babies and also killing babies outside of the womb. You know,
That's
you hear them, they advocate. Now also, wait a minute, let me just say this here. They advocate for the babies at the borders, but don't nobody advocate for the babies inside of the womb because they want to take them out. They want to actually murder them. Abortion is not birth control. Abortion is murder.
Absolutely. That's exactly what I was going to say. That's exactly what I was going to say. My co-host is with us today, John. John, would you like to say hello to the ladies?
Hello, ladies. I like Dwayne, we're so proud of you. We watch you every time you're on anywhere we can. And I want to say something special about your contribution to President Trump's success, and also how we're fighting and winning the fight for re-election. But you know, I want to tell you something interesting. And if I can say a special hello to Rochelle. Rochelle, you and I have the same name, and we're very proud to have that with you. So I'm John Richardson, and you're Rochelle Richardson, right? So I just thought I'd mention that. We're like brother and sister. But anyhow, Rochelle and Lynette, it's such a pleasure to have you on. You know, when Donald Trump won, almost within days on this show, and we predicted it here ahead of time, and it was a hard thing to do at the time because most of the polls were negative. The Rasmussen poll was the one that called it, and this is the only poll really that has any credibility. Unfortunately, it's down at the moment because we're kind of in the fight of our lives because of what the Democrats are up to, and we've got to do everything we can to stop it. But right after the president got elected, I said to Dwayne, I said, you know, if I was Donald Trump, what I would be focused on right now, like a laser beam, is increasing the African-American, you know, following that he has, raising it from single digits and put an outlandish figure, something just beyond you know, almost impossible to attain. 80, you know, think big and set an 80 or 90%. And you have done, and the same with the Hispanic vote, and you have done such an incredible job in driving that popularity and his following much higher. But I've got a suggestion for you, because we are in the fight of our lives, and you know, the next year is going to be, it's going to be a real battle. It's going to be there's a war on with these Democrats, and they're not going to stop at anything. You know, unfortunately, I was just saying just before you came on, even though this is a ruse and they don't really have any real reason to impeach this president, they're going to do everything they can to do it, and they probably have the power to do it. And that's a very unfortunate thing, but it's something we have to live with, and something we're going to have to overcome. So, you know,
can I just say this to you, sweetie? You are what you speak from your head to your feet. One thing about Diamond and Silk, we don't focus on the pole, we focus on the goal. And we have somebody that's working behind the scenes, and that's God. So God has the power to overpower Nancy Pelosi, these left-leaning Democrats, all of the radicals, everybody that wants to do this president and this country harm. We have somebody named God that's going to take care of all of that. What we got to continue to do as Americans is be together, unite together, help each other together, and give everybody that energy that we need to continue to uprise, especially even within the Black community. There's an uprising going on there where people are awakening to the fact that, look, I've been asleep this long, but now I see what's going on. And we have to continue to stay positive. When they throw us something negative, we got to flip it around to something positive and stay focused on that, because what you focus on expands.
You're dead right. Look, you've got a little over a year left, and what I'm going to suggest to you is, is a way to amplify your power with a megaphone as big as the world. And one idea about doing that would be for you to, or for the Trump campaign, to put together an infomercial featuring you guys and maybe Steve Cortez and people, because look, the truth, the Republicans have the truth. All the bad, all the terrible things the Democrats have done, and it's a matter of, think about Donald Trump. What does he say every day? Every single opportunity he gets, he talks about the lowest unemployment rate ever for Blacks and Hispanics and Asians and almost everybody else. And you know what? He's brilliant at it, because if he wasn't doing that, guess what? Nobody would know about it. So
nobody would know about it. That's right.
So what we have to do is use people like yourselves who've got a connection, who can go out there and tell the truth, but tell it 24/7. Infomercials playing around the clock from now till election day, so that it's going to bring more and more people in. And you know what? Testimonials, more and more people like yourselves telling why you switched, why you walked away from the Democrats. I think this is a very powerful idea, and I hope it can go somewhere. If you can take it, take this idea and make it happen, I'll be so proud of you.
I'm quite sure that campaign is working behind the scenes on making certain things happen. Now, I don't know if you would see Diamond and Silk on the commercials or whatever, but I'm quite sure that they're making some things happen. But let me just say this here. What I love about the Black community, Black people are waking up. They are seeing that our president is being railroaded, yet they are seeing how our president, how they demean him and call him names, yet the same president made it possible to make sure that unemployment was at an all-time low, especially among African Americans or Black people. The president put in the First Step Act, opportunity zones, things that the mainstream media won't talk about, but the president continues to tout, and we also continue to talk about. I really do believe that this go around that the president is going to be fine with African Americans. Let me tell you something. They don't stop losers, but they will try and stop a winner. The reason why they are trying to stop President Trump is because he's winning, and they are afraid.
That's right.
They only smear who they fear. They fear him. That's why they smear him. And they want to use one narrative and keep that going and think people are going to fall prey to it.
That's right.
And people are ignoring it. They're paying attention more to Donald Trump than they are this mainstream media.
And that's why we have to do like the Underground Railroad. We have to be there to meet the people where they're at, in their face. Is what we have to continue to do. And yes, we can run commercials after commercial, but here's the deal. Do you know that the Democrats, the left, own the media?
Absolutely.
They own the media. Anytime they can take and stop our president's ad from running on a left-leaning liberal station, and they try to silence Diamond and Silk and conservative voices. So we did one better. We have to go and take the message to the streets, and that's what we're doing. But we do agree with you about the ads, and we would love to be in one of those ads.
Yeah, infomercial. Think about infomercials. They run all night, they run all day,
and
everybody gets to see them. And the thing is, you can get the Republicans have the truth. We've got the numbers. The runs are on the board. The unemployment numbers the employment numbers are staggering. 6.5 million new jobs in just under 3 years is a phenomenal. And that's 6 million new votes for Trump, potentially. Remember that.
Right, that's right. And now our president, he have a record to run on. See, before in 2016, it was, well, he may not.
Yeah, it was just a promise.
Now he has a record
Yeah, remember what he said. What have you got to lose? I think that's a very powerful thing. They only fear that they smear who they fear. What have you got to lose? That's such a powerful thing, because you can go to so many people and say, what have you got to lose? And they say, well, I took a chance on Trump, and I'm so glad I did, because my pay is up 6,000 or whatever. But this we've got to get this message. Many people sort of, they shrug off the unemployment because it may not be hitting them, but we just keep at it for the next year. I think it's got to be relentless. You got to win back the House, because if we go through 2020 and the Dems are still in the House, you can't get anything done. So we have to get the House. Then that wall gets built, everything gets completed. And all the other things, the tax cuts. The infrastructure bill. Can you imagine if we'd gotten this infrastructure bill, $2 trillion, where the market would be and where the economy would be today? That's a real tragedy.
Can you imagine? Listen, but when you have the left, when you have the Democrats, all they are advocating, instead of legislating, they want to investigate. Now they want to impeach based on their own interpretation of a transcript. They say we have whistleblowers. All of a sudden, the whistleblowers went away, but why are we listening to whistles when we should be reading the actual transcript? They dismiss Joe Biden, his quid pro quo, the shakedown that he did with the Ukrainian president, with using American tax dollars, which was foreign money for the Ukrainians. I mean, so all of the stuff they're doing. See, they want to impeach him because they know they can't beat or defeat him.
That's right.
They are totally afraid. And also, a lot of these people are crooked.
They're corrupt.
They're corrupt.
Yep.
They go up there, they make it poor, making $174,000 a year, and now they're filthy rich.
That's right.
What does that tell you?
How does that happen? Right. How does that happen? President Trump has actually lost money. Yeah.
But when you start, so let's talk about that. So when you look at Joe Biden and Ukrainian, his son's sitting on the board making $50,000 to $80,000, probably up to $160,000 a month. Several numbers been floated. I'll say allegedly on the numbers, just in case I don't have them right. Well, if his son is making that kind of money, don't you think Joe Biden ain't getting no alleged kickback?
That's right.
Just understand that.
Because remember, he was the vice president at the time when all of this went down, so he was selling what's called assets to the office. It makes me wonder, do we still own the Statue of Liberty? Because, I mean, did anybody sell that out? Same way with Hillary Clinton, Joe Biden. A lot of these people, what they do is called lobbying. They lobby between a lot of these different foreign countries, and then they take and put write legislation for whoever, like, let's say Obama was the president at that time, to sign off on it and push those legislations. When those legislations are pushed and that money is gone to those foreign countries, there is somebody there from that family member sitting on the board some kind of way where money is translating back through that particular person and coming back into that person's bank account.
Yeah, they're getting $1.5 billion from China. That's why China think that they can do whatever they want to with the United States.
That's right.
Joe Biden, how is he going to be president and work with these countries that he done took big money from, or his son done took big money from?
That's right.
And Hunter Biden, why did he get a job here in America? Why was it? Why did he get that over there in the Ukraine?
That's
you talking about a crackhead clicked out the military. A crackhead kicked out the military can't go from nothing to making $50,000 to $60,000 a month.
That's right.
It looks suspicious. This is crazy.
And we sit here and we talk about China taking and stealing our intellectual properties and different things. No, somebody's selling that out to them. All of these kickbacks and paddywhacks is going on here.
And don't forget about the $150 billion in cash that was sent to Iran. How many people scammed from the top of that? I'm beginning to look at the whole thing. When we send billions and billions overseas, when they send billions and billions overseas, how much of it is coming back to somebody's pocket?
That's right.
That's what we need to ask.
What do you think about this? What do you think about this road trip to Afghanistan over the weekend?
I didn't understand
that road trip over the weekend. That's nothing but another scam. See, they got to protect their interests. You know, when you're at war, when there's war going on, people are making money off of that.
That's right.
Somebody have an interest in these wars. That's why they're called endless wars. They keep it going so that money can continue to go over there for their infrastructure. Nothing never gets built, but money continue to flow back to somebody's pocketbook. That's why they want to take and try to say, we need to secure the border over there. but refuse to secure the border right here in America.
Right.
Okay? They know if they take that money and send it foreign to someone foreign, then that money will come back around to them. Look, it's always been a scam like this.
Kickbacks and paddywhacks.
That's right.
And we're alleged all. Mm-hmm.
You're speaking the truth. You're speaking the truth. And I pray America wakes up and hears your voices, because not only do we have to keep the Oval Office, we got to take back the House.
We
got to take back the House. And here's the sad thing about the whole ordeal. We, as the American people, work hard. We pay taxes, and then they want to continue to raise more taxes. That tax money goes to the government, you all, and then that money is what's going out into these foreign countries. It's not their money. They're using and abusing our money. It's not their children over there at war. They're using our children. It's not their children. It's our children they're using to go over there and fight these endless wars while they make money off of it.
Right.
It's a sad state of affairs, and the American people have to realize.
It is sad, but it'd be even more sadder if the American people look the other way. They need to open up their eyes and see what's going on and speak out about the corruption.
That's right.
It's been going on for decades.
Amen.
Yeah, for decades. Literally. I'm Michael.
Using and abusing American tax dollars. It's not government money. It's America money.
Yeah, why do you think they're advocating for keeping people high? Want you on this marijuana and all of this different stuff? They take away the straws in California, but give people plastic syringes to continue to shoot up. They allow those plastic syringes, but take away the plastic straws from the American people to suck out of it. It's a shame. Homeless, especially in these Democrat-ran cities. You got people, American people, veterans, living in tents, defecating on the street, don't know where their next meal is going to come from, but yet they send all of this money over to these foreign countries to take care of their people, but won't take care of our people. And another thing, as taxpayers, we're their boss. We pay their salary. So it's time for us to say, wait a minute, enough is enough. We're tired of our money going to take care of other countries. What about our country right here? What about sanctuaries for American citizens, American veterans, our American children? What about sanctuaries for them? It's time for us to rise up and speak out.
This situation that we have in sanctuary cities, San Francisco is an example. I'm sure you ladies have been there. You've walked the streets. You've seen the problem up close. What brought us to this point? Why do we have this problem in America today?
It is being ran by Democrats, people that don't care. They want to continue to get their kickbacks and their paddywhacks. They say they put in these programs, but somebody is skimming from the top while Americans are being left at the bottom. And it's going to keep happening if the citizens don't wake up and smell the coffee. You have to wake up and see what's going on and stop voting for the same system that keeps handing you nothing but a tent for you to be outside defecating in the streets instead of in a warm house. Look at who's setting you up for failure, and you have to stop voting for that and vote to be a winner.
It's Democrat policy. It's all greed. It's a way. It's like a 52 fake out. A way to say, we're going to do this for you, but in actuality, it's just like Lyndon B. Johnson. They're going to give you enough to keep you quiet, but not enough to make a difference.
That's right.
What they've been doing for years, you all. And that's why you have a diamond and silk to educate the public. And when we educate, we need you to take that and then go educate someone else. And then that person go educate the next set of people. That's how we're going to get this here thing whenever we have to take our country back. That's how we're going to take our country back.
Well, we support you 100% on that. We really do. And I thank you both so much for taking the time to come and be here with us today. And I hope this won't be a one-off. I hope you guys will come back and visit with us again.
Oh, absolutely,
most definitely. And make sure that you all go visit Diamond and Silk at diamondandsilk.com. That's diamondandsilk.com, or come and visit us on one of our chit-chat tours at chitchattour.com. We love you guys.
Thank you for having us.
Thank you so much. God bless you.
An honor to be on
Keep
with
up
you
the
guys.
good work.
Thank you very much. Bye-bye.
Thank you.
CFRN, taking back the airwaves, making history. Good show.
Well done, Joe. That was a great little show going. Thank you.
Yeah, very kind of them, and we're going to take them up on their offer to come back and visit with us again. All right, John, I'm here, and I got the charts up. What would you like to take a look at?
Yeah, I was just commenting while you were out there that the Dow is notably weak today, while everything else is actually up pretty strong.
I pointed that out on Telegram last night. We've got the S&P making this run to the upside. Now, do you lay that at the feet of Boeing? Is that the problem?
Yeah, definitely. Boeing is a problem, and there's probably a few other components being dragged down. Look, it's not a big deal. If you remember, probably a year ago, we had the same sort of thing. The Dow was weak, and the other indices were stronger, and we ended up going to new highs. So there is a point at which the Dow could conceivably catch up. The time to be worried is when the Dow is the last man standing, when it's the only one that's up and everything else is down. That's usually a big warning sign. But given the political situation, I'm a little bit concerned because Trump's popularity on Rasmussen has dropped down to 45 and his unpopularity is up to 53. That's the worst readings he's had in quite a while. So there is a bit of a reaction going on to all the things that are happening. It's unfortunate that there was I guess last week wasn't the greatest week for him, but it's I actually don't think he's giving up on his Doral thing. He may have sort of yielded it temporarily, but I think he might still take another crack at it.
Is that Spanish for gold?
I guess Doral. I don't know. We have to look at that. I didn't think of that. I have to check it out. I mean, it's a logical idea, and it's certainly got the facilities, and it could be a great venue to have a G7 meeting or a G8 meeting, depending on what happens. But as far as the issue with Syria, they probably were in a no-win situation there, where either they would have to, put a lot more troops in to buffer Turkey. It was probably a pretty tough deal to get out of, and it was probably rolling towards them inevitably. So I think it's a lot more complicated than just deciding to pull out. Lindsey Graham came on in the last day or so saying that there is a possibility that out of this could come an even better deal than anybody might have imagined, and I hope that's the case. Because certainly Trump will come out a winner. A lot of things he does are out of the box and often a big shock that end up being proven correct in the long run. And I wouldn't bet against him on this one either. It might have been an arranged thing. Who knows? There's a lot of reasons why this thing could have happened. So, there's a lot of stuff going on behind the scenes. Same thing with the UK and this Brexit.
Okay, I looked up. I just looked up Doral on Google. You think I'm gonna make this up? Doral is a benzodiazepine. This medicine affects chemicals in the brain that may be unbalanced in people with anxiety. And then if I go over to the Spanish, the Spanish definition of Doral is flycatcher.
How about that?
So there's got to be some reason that we've come to use this term Doral. It's a city in Florida. I know that. So anyway, so the Dow here, I mean, we're right basically where we opened Globex last night. Globex opened at 26.725. It's up at 26.7.5 right now, right on last week's weekly trading zone.
If the market rolls over from here, the situation with the Dow could turn a lot worse, and it might drag the rest of the market down. So there's that to keep in mind.
Got S&P support at 29.67, and then again down about 29.30, and if things get ugly, back to 2,900.
Yeah, right now we are pretty close to all-time highs, and what would change everything to potentially extend this rally. Remember, it's pretty unusual given what we're looking at here with the S&P. I mean, look at it; it's sort of banging on the ceiling there, trying to break out. Maybe we're in a little bit of a pause here for the markets today, the currencies, but they could continue on tomorrow, especially if there's a positive development with Boris Johnson.
John, have a look at the chart. I'm sorry, you're getting into Boris right now. Okay, that's where I wanted to head you, because I got the chart up of the British pound.
Yeah, I'm looking at it. Yeah,
the monthly chart.
Yeah. What I was going to bring up on the S&P is if if Google or Amazon or any of these companies come out with a better than expected numbers, that could put the Nasdaq and the S&P over the top. And it's certainly interesting. Have a look at the mid cap, Dwayne. The mid cap.
What are your thoughts on the pound?
Well,
is this
like I say, I
the
think
vote going to put pressure on the pound? Is it going to send it down to this neckline? And we got a long ways to go to hit the neckline.
Yeah, I think. Look,
but if we take out that neckline, we could see 0.96. That's a measured move from the top of the head to the neckline.
Yeah, I wouldn't disagree with that. However, if the vote or if the Brexit is postponed till January, I think there's a rally ahead in the currencies, because it's just the remain. Remember before the Brexit, pound was $1.50, sort of $1.40 or 50, 60 even, and it could really go back there. And technically, it looks like it wants to right now.
It does.
So,
it does. But when I lay this on
sent out that alert about looking at the opposite and the possible breakdown of the pound, you have to be
right there.
You have to
resistance.
Yeah, you have to consider that possibility as well. So,
I hope it doesn't happen. But if that does happen, if we snap this neckline right there,
yeah, that'd be brutal.
Fortunes will be lost.
That happens. That's the equivalent of the dollar. Yeah, that's the equivalent of the dollar breaking up through 100.
Mm-hmm.
If that happens, probably heading back to test the 103. So it definitely could happen.
Let's look at the mid cap. Here we go.
Yeah, we had a big rally here in the last few days on this, and if you look at the daily, you're sort of breaking out above a range.
Well, we're going to run into resistance right here.
Well, it's sort of a cup and handle. It might go higher than you think.
If it can break above that, yeah, then that takes us up here, and then ultimately here.
If you can extend it out to see what the history looks a bit more, it's actually quite a dynamic situation. And I think the mid cap is a little bit aligned with the international markets, the emerging markets. So, what is it that's making the mid cap kind of lead the way higher? I mean, that's the best. That's as good as it gets. Is it the stimulus going on with all the central banks? There's something pushing this mid. Is it the numbers? Is it the earnings? If it's the earnings and the general, we are in for a breakout. I mean, there's nothing more bullish than the mid cap leading the way higher. It's very positive. The mid caps are the transports, and the transports are, look, today, what's the difference between the Dow and the transports? The Dow is the dog, and the transports is on fire. The transports are up today, the equivalent of about 500 Dow points. So tell me which one's more important today.
Say that again, John. I was trying to draw this.
The transports is up 141. If you multiply that, let's see, 2.5.
Well, the transports have always been a leading indicator for you.
Yeah, we're up 350. We're up approximately 350 on the transports today, basis compared to the Dow being sideways or down. So that's a big deal.
You see this trend line I just put on the mid cap?
Yeah.
And that's an issue. I mean, it's reality. It's got to be dealt with.
Yeah.
If we get there.
Yeah.
What else you want to look at?
I think the energy markets. Oh, actually, check out lumber. Lumber's breaking out to a new high. That's good.
Well, there's a there's a bull about to stumble out of the stall in real estate that we've never seen before. All the major home builders are going from building single-family homes to purchase. They're building from the ground up single-family homes to rent. That's the new big thing. And we don't want lumber liquidators. We want lumber futures. Here we go. All right. There's a front month on lumber.
Yeah, it's breaking up. I mean, it's a long way from its highs, but it certainly looks like it wants to challenge, get back into the 400s, and could be.
Let's see, where was lumber back in the crash? Here's a monthly chart. So 2000. Yeah, right here. This is where lumber stumbled and fell. And I look at that cap there. You see that?
Yep.
So lumber recovered, the real estate market recovered. If we break above these previous swing highs, if we can take out this swing high at 460, then we can make a run to 600.
Yeah.
If we fail
well, the fact that the lumber is coming to life here is it's kind of bullish for the market, bullish for the economy,
bullish for housing
recovering. Yeah, yeah.
Unless you're trying to buy a house, and then it's not so good. Because it speaks
I found an interesting concept over the weekend.
Did you see what the governor did in California?
No.
If you own a building lot anywhere in California, for a building lot that you bought to put a single-family home on, every lot zoned single-family home you can now build 2 dwellings on that one lot. He signed that into law. Let's see. No more single-family homes in California. I don't know what the bill is called. California upends single-family zoning to fight housing. This grant, yes, came out a few days ago, but this would serve our purposes. The governor already signed this. California lawmakers tried earlier this year to force local governments to allow 4 or more homes on land zoned for single-family residences. Fierce pushback from suburban communities stopped the plan in its tracks. For many, the long-standing neighborhood template of a home, backyard, and garage on a lot was too intrinsic to the California lifestyle to upend. Now, he signed this on, let's just pull up new California housing bill. California bill to boost housing in suburbs gets new life. Newsom may back it. Now, the article I saw he had already signed it. But he didn't fund the affordable housing. Here, let's see if this is it. Yeah, I'll have to dig through and find it. Go ahead if you got something you want to talk about. I'll have the bill ready. We'll take a look at it tomorrow. But that's what it does, is it turns every single-family home lot. You can now put 2 structures on it.
So that makes every lot have an extra piece of land to sell.
Well,
really what that does,
in my mind, it almost doubles the value of every piece of property in California.
Exactly.
Yeah.
Exactly.
That's what I see out of it.
Well, yeah, and then you know what that does? You know what that does? That pays all those poor people that live out there in California taxes. If their value is doubled, then their taxes are doubled.
Oh, yeah.
Good point.
That is a good point.
And you know that California's, deeply in debt, and They are. They are taxing the Californians.
Governor Newsom says he's still pleased with his work. How did that guy get elected? He's at the end. I'll find it. All right. What do you want to look at, John? We'll look at something else for now.
Just take a look at the S&P daily, Dwayne. It's really starting to look like it's almost at a new closing high.
Oh yeah, we were just we talked about that at length at the beginning of the show. We'll go over the cash market, the SPX. Let me get it on daily. There's the all-time historic high right there, July 26th.
Just the stones thrown out.
We got to overcome. We got to overcome the obstacle from last Thursday.
Yeah, we might even be there by tomorrow.
This double top obstacle, and there it is, right there. And unfortunately, historically, every time the S&P 500 puts in a new all-time historic high, this is typically what happens right here.
Yeah.
Over and over and over, again and again and again. It's just what the market does. None of us want to see it. It's what happens. It was really evident last October when we put in that new all-time high. Led to the worst December since 1932.
Yeah, this one might be a bit stronger.
And then this one here sold off. This one here sold off.
This one might keep going because remember the cyclicals, the end of this quarter should be very strong. So
well, not only that, we're in the presidential cycle now too.
Right, exactly.
And
exactly.
When we put in a new high, I will expect it to fail until it doesn't. That's how I'm going to look at it.
Yeah. Well, that's reasonable.
And I'm just basing that on the past. That's all. And I know past performance is no indication of future results. But hey, what else we got?
But when it fails, I don't think this time it'll fail as bad as it did back in July, for instance.
Hopefully
I think
not.
If it gets up there, puts in a new high, then we're looking at the first spot down, 28.53, right in that range.
Yeah, we want to see higher markets as we move into this presidential election cycle.
We do.
We definitely want higher markets. The timing would be ill if we...
if we started to fail right at the presidential election.
So hopefully we can get above it, and if there's going to be a sell-off, let's get it over with, so that as we move towards November of next year, then we can have clear sailing above 3,000. And so the next big round number above 3,000, of course, is 4,000. And if by the time November of next year rolls around, if we're even on a track to 4,000, that will bode very well for the president.
Go ahead and have a look at the mid cap, MDY.
I had the mid cap up earlier. What do you want, MDY? I don't know do I have that one yet? There you go.
Yeah, see, it's not that far away either, and look at the transports as well, if you can put the transports in.
There you go. There's the transports. Is that what you're looking for?
Yeah, that big gap. There's a big gap. Look, island bottom.
This isn't showing today's candle, John. All I have charting is end of day on
this. Look at. Yeah, I think it's up. Well, it's up a lot today. So it's up 140 points. So that puts it closer to 108. And look at the island bottom.
No, if it's up 108, that puts it closer to 106. Because we closed 105.08.
No, 140. So it should be right up there in that gap now. Look at that. Oh, it's 130 now. It's pulled back a little bit.
Yeah. So it filled the gap at the top, and it's probably, you see how we have a double gap down there at the bottom? It's probably going to work its way back down, fill that up, and then go back up.
Are you talking about
That's what I'm thinking. Yep, right in there, and the one right before it. The gap a couple bars over. Right there. You see how it's a double gap.
Yeah, yeah. We've already gapped
filled
above that one.
Yeah, it filled the first one, but I mean, there's still an area right there. There's an area right there where there's just indecision. It seems like.
Well, when markets, and this happens sometimes when markets can't do it. Well, actually, it almost filled a gap right there on that little wick.
Yeah.
And then it
did.
gapped over it. Yeah, I see what you're saying. All right, John.
And, I mean, if you look a little further to the left, there's another one right at the same place. And
yeah, I would call this an important price, important area. I haven't studied this chart at length,
right.
but
always retest it.
something going on here. Yeah, the market keeps coming back to it.
Mm-hmm.
And we got this.
Okie doke. Well, listen, it's quite a show.
Yeah,
thanks
great.
very
Thank
much
you,
for the
John.
invite. Yeah, all the best.
For joining us. All right. Talk to you tomorrow.
Yeah.
Okie doke.
Okie doke.
All right, guys, we left off with the Dow. We covered the S&P. We had a trigger at 29.97, and when price reached up through this red and falling, CFMA1, not a good idea to go long there. With this bearish presence, wait for it. Here on this touch of the trigger, it was on that candle, the opening of the next candle, we turned blue on the CFMA1. That's buyers showing back up to the scene. So on this trigger, it led us to a 5-point move, and then we got back below the trigger, and now we've moved up almost 10 S&P points. We've moved up 9 at $50 a point. That's $450 per contract traded. Okay, and that's how we do it here at CFRN, over and over and over, day after day after day. Doesn't matter what market, doesn't matter what time frame. Our fundamental principle is the same. What you see in the live training room tomorrow morning, if you're on the trial, or what you saw this morning, is no different than what you see here, other than this time frame. Time frame is different, and the amount of risk that you'll have to accept, and accepting risk is a whole nother discussion. Risk is not your enemy. Risk well managed is a trader's best friend. All right, let's look at the Dow. All right, last night, Concierge Trade Alert. If you did not grab a screenshot earlier, and I invite you to do so. Let me pull it back up. Here we go. 5, 4, 3, 2, 1. Is it hot in here? Or is it just me? I think it might just be me. Hang on. It's that time of year here in Phoenix where you can put on a sweater in the morning and feel cozy, but by lunch, you're back to your t-shirt. Otherwise, you'd be smelling a little funny.
It's cool here right now. Right now, today.
73 degrees
Yesterday was
outside
beautiful.
here in Phoenix. What's your temperature
Yeah,
there?
it's about 70, something like that. But overnight, it gets cool.
Yeah, last night it cooled down pretty good. Let me see. Here we go. Well, if you look at tonight, it's going to get down to 58.
Yeah, let me see.
The coolest hour of the day is at 6 a.m. tomorrow morning. So.
Here's the forecast for today.
Here's the forecast for today. 60s at night. 62.
Hey Alexa, what's the forecast for today?
In Phoenix, it's 76 degrees Fahrenheit with mostly sunny skies. Today's forecast calls for more of the same, with a high at 86 degrees and a low of 57 degrees.
That's typically what Phoenix is, more of the same. It's just
More of the same.
More of the same. All right, guys, on the Dow, we said to consider being long 26865. 26865. All right, that's fair. That's a reasonably straight line. You know what? I've been threatening to do this for a long time. I think I will. 26865. To give you a good idea. And it's straight. And then on the short side, 26710. Yeah, that's going to be awkward. 26710. All right, so we put in a swing low at 701. So about a 9-point move in the Dow. Now remember what I said earlier when we were looking at the S&P. Everything that happens between the two lines is the market making up its mind. When we get above the BBC, well, then we start thinking, okay, market appears that it wants to trigger on the long side and make a run to the upside. So on the Dow, and we already talked about the fact, the Dow and the S&P since the open last night have been traveling in opposite directions. Now let's throw our indicator on, because we can. Our indicators do a very good job not only of helping you to spot the underlying rhythm of whatever market and whatever time frame you apply them to, and then finding the high probability, low risk opportunity to enter a trade. It also does a pretty good job of keeping you out. And again, we're getting pinched between the BBC, which when we approach from below represents good resistance, and the weekly trading zone, when we approach from above, good support. So you see how we're pinched. So if you're out there clicking your mouse right now on the Dow, going long, going short, give it a break, okay? Let price take out this swing low, or move above the alert on the long side. Everything in between is the market making up its mind. On the Russell, last night, Concierge said, consider being long 1542, and that was a nice run. Now I'm going to go back to my line I've been using forever, otherwise it's just too cumbersome. All right, so 1542. Now the other line in the sand was 1533, which we didn't have to deal with, okay? Everything between the two lines. Now, our passport holders, they get the Concierge Trade Alerts shortly after the Globex Open. Try to get them out shortly after the Open, and I always try to get them out before 9 p.m. Eastern. Most days, I succeed in doing that. So if you went long at 1542, your trade to target overhead is 55, working off of last week's zones. Alexa, 13 times 50.
13 times 50 is 650.
So that's a $650 per contract move from the trigger to the trade to target.
I'm not quite sure how to help you with that.
No one can, hon. Don't worry about it. But thank you. All right. $650 per contract traded. Now, we discussed earlier the margin on the S&P. It's the same on the Dow. The day trading margins are. Same on the Russell. Same on the NQ. $500 with most brokers. I think some brokers might even discount it a couple dollars more. But if the $500 day trading margin represents an issue, maybe it's not a good day to be trading anyway. Okay. Now, don't forget this part though. Come the close today, if you have an order open, it's going to go to the full margin, and there's nothing wrong with that. as long as you're prepared for it. Now the maintenance margin, I gave you that figure earlier. On the S&P, it's $6,300. On the Dow, it's $6,050. On the Russell, it's $3,575. And on the NQ, because it's prone to being volatile, $7,600. So for $500, which, by the way, when you close the trade, you get your $500 back. Now your account is going to be debited or credited, whatever the results of the trade were. If you were trading one contract and you took part in this $650 per contract move, when you close out the trade, your $500 in margin goes back to your account, so nothing's changed. And because this was a positive trade, a profitable trade, $650 per contract, your account balance will now reflect a gain of $650. If you are the trader who has earned the right to trade 10 contracts, you're staring at a $6,000 move. Make no mistake, if you trade 10 contracts from this trigger to this target, $6,500. Don't go rushing out to trade 10 contracts just yet. If you choose to hang your hat with us, if you choose to become a CFRN trader, we're going to turn you on to a little thing called the blueprint. And the blueprint, the 2420 blueprint, is designed to take you from one contract to 20 contracts, not just 10, but over a period of 24 months. That's in a perfect world, which we don't have. You're going to start in SIM, and nobody wants to hear that. Man, I just want to click the mouse and make some money. Well, many have come before you, thought the same, done the same. They no longer call themselves trader. Okay? In SIM, until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Drop the ball, start over. Drop the ball, start over. 10 consecutive days in a row. Nobody wants to hear that, but it's good for you, okay? It's enabling you to start your trading business on a firm foundation, okay? Once you put together those 10 in a row, the blueprint will give you the green light to go live with one, just one, not 1, 1. When you increase your account balance by $2,000, you'll get the green light to add a second one. Now that's a big day. You've accomplished a lot, but your business really changes the day you add your second contract, because you're adding the second contract with profit you earned in the market. Think about that. You're adding the second contract, not with your savings, not with a loan, with profit. You're starting to build something real here, something tangible. You'll go on a calendar-based system with the blueprint. You'll be able to look at the calendar and know if you continue your forward progression, if there are no mishaps, no missteps, no rough patches in the road. You know the day you'll add your third, your fourth, your fifth, your 10th, even your 20th. I promise you though, if you live in the same world I live in, there will be some hiccups in the giddy up on the way there. Here's how we deal with that. Here's how the blueprint deals with that. Remember, you had to get 10 consecutive days in a row to go live, right? That's 10 consecutive days where you reach your goal in 10 trades or less. Once you go live, anytime you have 2 consecutive days back to back where you do not reach your goal in 10 trades or less, the blueprint's going to put you back in SIM. You're going to book a mentoring session with me, with Michael, with both of us. We're going to work with you in a private one-on-one environment. We're going to help you troubleshoot that chart. I'm going to help you understand what happened. You may have done nothing wrong. You may have made no mistake. Could be that the market just didn't do the next high probability thing. Maybe conditions for trading were inhospitable at the time you put those trades on. Now again, our indicators, they do a great job of putting you into a trade, but they also do a great job of keeping you out of a trade when market conditions are not conducive to trading. Now, going from live to sim is not a walk of shame. Please don't ever think of it that way. Warren Buffett wouldn't. Warren Buffett would see it as a smart business decision. You've had 2 days back to back, you didn't reach your goal either day in 10 trades or less. You can continue to throw money at the market. That's what most people do. That's what most people would do. Look at my screen. It's also why 9 out of 10 new traders fail. 9 out of 10 fail because they have no teacher. So I guess I should, drop the bomb, because you're tuned into this radio program today, or you're listening to this podcast. Even if it's only for the moment, you got a teacher, and I'm telling you, don't do it. Don't throw money at the market. It will fix nothing. It will fix nothing. Whatever the problem is, it will only get worse the more money you throw at it. I blew up my account. Let me just send some more money. Okay. Well, you might as well just schedule every week or every 2 weeks. Look at your own history. Look at your pattern. Now, here's how the pattern. Usually, it takes a couple months to blow up the first account. But all of a sudden, you're clever. You know what happened. And I'm talking about myself, okay? I'm not pointing a finger at anybody except myself. So you refund the account. This time, it doesn't take 2 months to blow it up. It takes 2 weeks. So about the third time you refill it, you're very cautious. So now you go to the opposite end of the spectrum. It'll probably take you 3 months to blow that one up. And the next time you refill it, it'll probably take you 6 months because you're afraid to even put on a trade. It doesn't have to be that way. If you follow the blueprint will walk you through every step, every new contract. And when you hit that rough patch, put you back in sim so that we have an opportunity to talk with you, to try to give you some advice, to try to help you see, whatever happened. We have no control over the markets. We don't make, the bouncing ball go up or down. Order flow does that. And we already covered order flow and what dictates order flow. I can't change it. You can't change it. Nobody, I don't care how fancy their website or how flashy their email. They don't have the power to move the market. If they did, they wouldn't be sending you emails. Okay? All right. Just so we got that clear. Now, if you get sick, if you have to go on vacation, in other words, if you're an ordinary person, you won't actually get to that 20 contract goal in 24 months. You certainly won't get there any sooner by following the blueprint. That's the earliest possible time you could get there. Probably going to take longer. But you know what? By the time you hit 5 contracts, if you've built your trading business on a firm, solid foundation, you're probably not too worried about the 20. Because if 2 points a day and 1 contract can make you $100 a day, 5 contracts, same 2 points, you don't have to get more points. The way to solve the market riddle is not with more points. Let me just share that. It's with more contracts. The key is to becoming consistently profitable, even if it's only to the tune of 2 points a day. Because by the time you hit 5 contracts, now you're looking at $500 a day. Most people go, $100 a day, man, I can't pay my bills with that. But 500, most people can. Most people can not only cover their bills with $2,500 a week, 10 grand a month, 120 grand a year, might even be a little something to put in the in the little kitty for a rainy day. Not that you should stop at 5, but by the time you do hit 5, it takes a lot of pressure off. And remember, you don't have to run faster, jump higher, work out more often, network with more people, spend more hours in front of the charts. You just add another contract. Add another contract. Once you've earned the right to do so, if you add more contracts than you should before you should, you've been warned. You now know the truth about trading, at least part of it. Stick around, we'll teach you all the truth that we know. Again, you won't always like what we say, but we'll always tell you the truth as we understand it. Okay? All right, so we know what happened on the Russell. We know what happened on the S&P. We know what happened on the Dow. We know what happened on the Russell. Let's look at the NQ. Okay. Concierge Trade Alert last night for the NQ said, consider being long 79.40. So we're just right up there knocking on the door. 79.40. Said to be short, consider being short 78.63. So if you followed the blueprint, or if you followed the Concierge Trade Alerts, you didn't get stopped out on the short side because there was no short trade. Remember, everything between the lines is the market making up its mind. So to consider being long 79.40. Now the trade to target based on last week's zones is 79.94. That's about 50 points. The NQ pays $20 a point. If price reaches that weekly trading zone from last week, this will be a $1,000 per contract move. Now, do our indicators support going long here? Let's take a look. They do. But what did we talk about in depth when we were looking at that S&P? We got our bullish cross here. Price pulled away. Then what did price do? Price pulled back. Why? Because that's what price does. Price always reverts to the mean. Remember, even in a rising market and even in a falling market, price is still going to channel back and forth, back and forth. You're going to have green candles and red candles, green candles and red candles. Price moves up, price moves back. Price moves up and back, and up and back. Eventually, price is going to revert to the mean. Now the question becomes, okay, what if I get long right here, right now, at 79.40, and price decides it's ready to revert to the mean? What's the distance between 79.40 and the BBC right now? 15 points. At $20 a point, that's $300, okay? Now, if you think price is going to pull back to the BBC, and we know that eventually it will, then your stop's got to be below that. And if it's too close, look at that spike right there. If that spike came right here, right now, would it take that out? It would. So what am I saying? I'm saying, because it's discretionary trading, and the number is 79.40, you could go long here, as long as you understand the amount of risk required to take this opportunity. Now, with 50 points overhead, you certainly don't want to risk more than 50 points, and you may not be able to risk 50 points. Your account size might not support that, okay? Don't ever let anyone convince you to trade any kind of methodology or strategy that requires more than a 1-to-1 risk-reward ratio. Now, when you can find 2 to 1, 3 to 1, 4 to 1 opportunities, by all means. But when they flip it on you and say, hey, I'm going to show you how you can risk 10 points and make 5. That's not good math. That's not good science. It may be fun for a while, but the day's coming. I promise you the day's coming. You'll get stopped out 3 trades in a row. And then where are you going to be? Are you going to have the intestinal fortitude to actually come back if you have any money left? Are you going to be able to come back and put on another trade? Don't even go there. Don't even entertain the thought. Okay? You don't have to. It's not necessary. If we continue to consolidate sideways, almost as if by magic, this BBC is going to rise. Now, a pullback to the BBC and a BBC that rises to meet price are not the same thing. One speaks of continued upward momentum. The other one, maybe not. Remember I said we expect it to hold until it doesn't? A rising BBC and a flat price, that's a beautiful opportunity for a until it doesn't scenario to unfold. Okay? All right. So, really, I got to wait? Remember those 2 new tools we put in your toolbox this morning? Patience and discipline? You should take them both out right now and kiss them. Because they're now your best friends. They'll save your bacon time and again. They will prevent you from blowing up another account. I can't promise you you'll never blow up another account. I can promise you this, though. If you follow the 24/20 blueprint, if you understand what we teach you and put it into practice, if you love your newfound friends, patience, and discipline, you're going to have to work really, really hard to blow up an account. But that's just a fact. Because everything that we do is designed to prevent you. But even our best efforts can be thwarted from someone who's bound and determined to blow it up. Okay? So, what do I do? Again, it's discretionary trading. You get to make that choice. Well, I think it could pop right now and, give me 10 points. That's $200 per contract traded. I'm good with that. Okay. Just let me teach you how to structure your risk for such a trade as that. Go to eminitrainingschool.com. Take our free trial. You and I'll spend 45 minutes together in a one-on-one mentoring session, and I'll teach you exactly that. I should also say that even though last week's weekly trading zone is 50 points overhead, this week's weekly trading zone, you know what? I'm going to do it just because I can. You ready? What do you think this week's weekly trading zone is? Come on, venture a guess. Where's the obvious resistance on the chart? Say what? True story. That's the only one I give away. Remember, you can have them too, all of them. You can have all the weekly trading zones for this week, but you gotta go to eminitrainingschool.com and take the free trial. Did I mention it's free? No credit card required. Now, we had a pretty full house this morning. I can't promise you you'll fit in, but, well, if you can get in, you'll fit in. I'm just not positive you'll get in. So book your reservation early, okay? Am I literally saying here on live radio that we've already hit the weekly trading zone overhead and backed off? Yep. The next weekly trading zone for this week on the NQ is 79.45/46. When we approach it from below, We expect it to be good resistance, right? If that happens, what's it going to do to price? If it continues to act as good resistance, it's going to send price back to the BBC, which we expect to do what? Serve as good support. Until it doesn't. But if it does serve as good support, it's going to send price right back up to the zone. And just as price was pinched here, and in the other chart we just looked at, we'll have that scenario again. Now, when I put out the, now let me give you the timeline so this makes sense. I put out the Concierge Trade Alerts last night at 6:15 Eastern. The weekly trading zones don't make it out to the partners and passport holders until, and those on the free trial, until 6:15 a.m. Eastern. So last night, all our traders had to go on was this. But as of 6:15 a.m. Eastern this morning, they had this. You see what a difference a zone makes? Okay. Now what's the, oh, I told you before, 3 things can happen at a zone. I showed you lots of examples of consolidation. That's the most likely thing to happen. I even showed you an example of the slice, right? And how it pulls back, right? Here's rejection. That wick, think of a stove. You walk into a room, there's a stove. Any stove. I think I'll touch the stove. It's hot. You snatch your hand back. I don't know why that image always comes to mind, but it does. So that's rejection. You can think of the high school dance, the prom, whatever spells rejection to you. Okay. Price was rejected, which leads to it potentially being sent back down to support, which will send it back up to resistance, back to support. One of the 2 players, buyers or sellers, will dominate, will prove that they're more committed to their position than the other, because price will either break hard to the downside or break to the upside. There are very few absolutes in the world of trading, but what I just said, I absolutely promise you, one of those 2 things will happen. Oh, you mean it's going to go up or go down? Exactly. People laugh at that. They scoff. Oh, that's so elementary. Man, I got this fib software here I paid 20 grand for. You can't tell me nothing. Right. You're absolutely right. If you pay 20 grand for fib software, I can't tell you nothing. I'm not even going to try. No, I'm just kidding, guys. We've all bought stuff that, you know, didn't turn out to be what we thought it might be. You know, and then you're stuck with it, right? So you try to make the best of it. Let me clear the air. The software that I'm just talking about, I'm sure it does exactly what it was designed to do, as do most indicators and oscillators. Once you figure out how to use them, stochastics do what they're created to do. The MACD, all of it. Even stuff with crazy names like BBC or CFMA1, right? They do what they were created to do. But how much confusion do you need on a chart? Do I need any kind of indicator, oscillator, or anything else to tell me that price has run into resistance? Come on. The answer is no, I don't. I'm going to show you here if I could ever click on this thing. What's really going on? That's bizarre. Hey. No indicator, no oscillator. Just this week's weekly trading zone. As we were printing green candles, did I know I had a trade 2 target overhead? Did I know that when I got there, when price got there, that the next high probability thing would be for the market to encounter resistance after this brilliant move up? Yeah. Now, that's a huge difference between knowing what's going to happen and what the next high probability thing is. The market doesn't always do the next high probability thing, but it does it more of the time than it doesn't do it. And that's why it's called a high probability thing. Okay, real quick, let's run through crude. We've rolled forward to the Z contract. Last night we said to consider being short 53.60. And that's going to be and I think I mentioned important prices, important areas are almost always tested, because they are. You can look at years of archives of this radio show at youtube.com/CFRN. Go back 6 months, go back a year, go back 2 years. Pick a day at random. Fast forward to where you see me doing this very thing, recapping the alerts from the night before. Same thing. I'm just saying the same. That guy always says the same thing. Well, what else are you going to say unless you want to lie to somebody? This is the truth. I don't have anything better than the truth. Important prices, important areas are almost always tested. Okay, so from 53.60 down to this swing low at 53.30, we'll call it. That's a $300 per contract move. Price gets back above the trigger, triggers again, gets almost to the weekly trading zone below. We put in a swing low at 52.85. We'll call it 52.90. That's 70 points at $10 a point. That's $700 per contract traded right there. If you entered short here and got out here, but you know what? Getting out at swing lows and swing highs are pretty tricky. It's pretty hard to do because you don't know it's a swing high or swing low till after the fact. That's something else I'll teach you and train you this week if you decide to join us on the trial. Okay? I'll teach you how to understand when the chart is telling you, this move may be running out of steam, or just going back to trigger again. But wait, there's more. Yeah, number 3 coming up. There's number 1, $300. Number 2, $700. Number 3, can't say. Hasn't happened yet. But I know how to read the chart and understand what it looks like when it's running out of steam. And by the way, that guy we talked about earlier, the one who actually earned the right to trade 10 contracts, he didn't trade 10 just because he had the money in an account somewhere. He actually earned the right, step by step, contract by contract, to trade 10. For that guy, this was a $3,000 move. And this was a $7,000 move. That's a pretty good way to start the week. Okay? Now, I'm not promising you can make any kind of money trading the way that we trade. All I can promise you is that we'll do our best job, our best possible job. That's what we've been doing since 2005. We'll do our best possible job to teach you exactly what we know and understand about how markets work. And to promise you anything more than that, well, that would be to stray from the truth. Because I don't know how to teach you what I don't know. I'm certainly not going to teach you something out of a book or a manual or PDF, except one book or 2 books. There's a couple books that I recommend to our traders. One's Trading in the Zone by my friend Mark Douglas. The other by my friend Mike Reed. It's not lost on me that they both made their last public appearance on this radio program. I'm glad that didn't keep Diamond and Silk away today. But Mike Reed's book is called Read the Greed, Take the Money. It's out of print right now. You couldn't get a copy if you wanted one. Maybe you can find somebody that has a copy and would let you read it. All right. Trading in the Zone is still in print. If you digest those two books, get to know them, understand them, walk in the enlightenment that they provide, I say you could potentially do very well in these markets. Okay? The long side on crude was 54.20, and at 4:30 this morning we put in a high at 54.17. Never triggered on the long side. 54.20. Okay, 1, 2, 3. All right, go real quick, and then I gotta go. Gold, consider being long, 1504 never happened. Consider being short, 1492 happened. First trigger is worth about $140 per contract. And the second trigger, just on that initial candle, we'll call it 1487. It's about $500 per contract traded. A little more. Okay. And then the market started to do what? A touch earlier. Walk sideways. And when the market starts to walk sideways, what does that mean? Might be time to exit. Okay? All right. It is at this time in our programming each day. Time for our good word for the day. Let me pull up my notes. Good word for the day. Y'all ready for this? Matthew 6:25. Do not worry about your life, what you will eat or drink, or about your body, or what you will wear. Why? Because God will take care of you. Why? Why will God take care of me? Well, or why would he take care of you? Well, if he lives in you, you got to ask yourself that question, does he or doesn't he? It's either one or the other. If God lives in you, shouldn't it be obvious why he takes care of you? How can you say you trust him and then worry obsessively about your health, your kids, your job, and your finances? Concern is one thing, but worry is an affront to the God who has never let you down. Paul writes in Philippians 4:6, don't worry about anything, instead pray about everything. Tell God what you need and thank him for all he has done. Then you will experience God's peace. So you got two options. You can pray or worry. Seriously, it boils down to that? It does. You can pray or you can worry. Now, maybe your faith's not even rock solid yet. Maybe you're working towards that place where you have solid faith in the Creator. Even if you're only halfway there, I'm thinking, I'm just thinking here out loud, correct me if I'm wrong. I can pray, and if there is a God, he might answer me. If I worry, I'm just going to get an ulcer. or do something else stupid? What do you think? In Matthew 6:34, Jesus said, take no thought for tomorrow. Because when you take thought, you try to take control. And when that happens, peace goes out the window. Worry is like a snowball. It starts small, but as you keep rolling it forward, it becomes big enough to bury you. All that's necessary to keep a stationary train from moving forward are 2 15-centimeter blocks of wood. Think about that. All that's necessary to keep a stationary train from moving forward even an inch. 2 15-centimeter blocks of wood. However, once it builds up momentum, it'll crash through a 2-meter thick wall. So stop the worry train before it leaves the station. God says in 2 Corinthians 12:9, my grace is sufficient for you. God will give you only what you need for today, and that way you have to keep trusting him for tomorrow. The Bible tells us that Jesus is the good shepherd who calls his own sheep by name and walks ahead of them, not behind you, not beside you, ahead of you. That's John 10:3. And it sounds like a pretty good deal to me. I can worry about stuff, or I can pray about stuff, and this Jesus, he's going to be out in front of me clearing the way. He's already gone ahead of you to arrange everything. Knowing that should help you face tomorrow, confident that God will take care of you as long as he lives inside of you. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.